So this is just the beginning. This is support and resistance trading. I sent these slides out yesterday around maybe 9 o'clock. If you guys haven't seen it, we're just gonna cover it one more time. So this is support and resistance stock trading. This is the first trading strategy that I've used to basically understand price action and understand, like, make my first few trades. Maybe for six months to a year, I was just using support and resistance. This strategy usually involves no indicators. Like at its core, it's just no indicators. It's just support and resistance. However, you can use indicators. We'll get into that in a bit. So support and resistance are important concepts in technical analysis for traders. So support is a price level at which demand is strong to prevent the price from declining further. What this means is a price of a stock is most likely to bounce near a support zone, and resistance is basically the opposite. Resistance is price where we reject it and we go down. I included a few examples, and we're gonna see a live chart later in the session. We're just gonna go see a live chart and see what that looks like. And these levels can be used for not just entries but as well as exits. You can buy a long position and you could ride it all the way towards a resistance and sell it as at a resistance, or you can take a short position, ride it all the way down to a support, and you can sell it at a support. So yeah, that's the basics. So what is a support? This is identifying a support. To identify a support level, traders look for an area where price bounces or previously has bounced. So this is a chart. This is SPY. This is a chart that a few of us definitely traded. This is not too long ago, maybe 3-4 days ago. I found a very clear example of a support level. You see there's a wick of this green candle. We tested it, and we were unable to break, and we bounced off that price. That's a support for us. This is a 5-minute chart. All these candles are 5 minutes, and we found the support. Bounced off that support, so we're gonna mark that support, and we're gonna use it for future levels of trading. So we could also use this support as a take profit point if we were to take the short from this red candle downward. Okay. Resistance is the opposite. This is also another SPY chart. This is on the 1 hour time frame. We see the 1, 2, 3 wicks. We were unable to break to the upside. This is just resistance. Nothing too difficult just yet. If you see that there's three wicks, usually 3 wicks is my rule. If you see 3 wicks off of a level, it's gonna indicate reversal. So we see 1 wick on the green, another wick on the green, and then red side. We finished the rest of the day is red. So 3 wicks is my general rule, and we can use it as a stop also. If you're running a short, if you're running a long, you want to take profit at the resistance. And you can be greedy and wait for it to break out, but in general, you want to take profit at resistance levels. So this is how to trade on a support and resistance based strategy. So as the stock price approaches a support and resistance level, traders will watch for a sign of a breakout or a reversal. So what this is right here, if we look where my mouse is, this is a reversal. And this right here, this is a breakout. So a breakout occurs when the price moves past the support or resistance level, while a reversal occurs when the price bounces off of that level. So this is a bounce, and this is obviously a breakthrough. This is a breakout. This is a reversal. We could obviously combine support and resistance levels with other indicators to help us with our trading. You can use other technical indicators such as volume. You can use EMAs. You can use a bunch of other things as well. But at its core, you don't really need much. All you need is a little bit of time to just identify support and resistance levels. And this is a conclusion. Blah, blah, blah. Okay, let's just hop into a live chart right now. So this is our live chart. We're looking at Google right now. In fact, let's just make our life easier. We'll go to SPY. If you want to see something, I was actually using a live chart. I was using a real chart. This is all the things in the presentation were all real charts. I did not use any of my own charts. I'm going to just delete this arrow. Okay. So let's just hop into it. So at its core, support and resistance is very simple, and it's the most beginner-friendly type of trading. So we're going to start on the 5-minute time frame with no indicators. This chart has no indicators right now. What we want to do is we want to start with the widest time frame first. So the widest time frame that I like to go, the biggest time frame that I would go, is the 1 day time frame. We start with the 1 day time frame, and we would zoom out, and we don't want to go too far back, but we want to go far back enough where we can see enough candles. So our resistance, we can see that at this point right here, this point was the highest that we got until we reversed downwards. So we're gonna throw a line on top of that, and I'm gonna mark that. When you're doing support and resistance, make sure you know what color is what. So for me, my 1 day chart, I'm gonna use pink. Let's use pink for my 1 day resistance and my 1 day support. It doesn't need to be entirely accurate, but for this case, let's just put it at the wick. So this is my resistance up top, and for my 1 day support, there's gonna be one down here, and there's also gonna be one down here. So far, any questions? This isn't too difficult yet. This is my 1 day support. 1 day support and resistance is between this channel, and we're still in this channel. If we break out of this, we're bullish. If we break down, we're bearish. Super simple stuff. Nothing too hard yet. We could find more resistance and support levels inside of this channel though. So for example, right here, that's a resistance, and right here is a resistance. You see 1, 2. That was the height of twice. You can call this a double top. 1, 2. Both of those are double top, and you can find another support right here. And yeah, basically, very simple stuff. Nothing too difficult. 1 day chart. We just found the support and resistance. Next, we're gonna go down and we're gonna lower the time frame down to 4 hours. So this is our 4-hour timeline. 4-hour timeline. We're also gonna change the color. We're gonna find another support and resistance. We're gonna find more. So you see how this was a support. We wicked off of this and we weren't unable to break it, so we bounced up. Okay, so we're gonna look for another one right here. We found another wick. We're gonna change the color. We're gonna change this color to something like blue. Let's just use blue for 4 hours. That's another support. Let's look for another one. There's one right here, which is also a resistance. We'll talk about this one right now. So look, this is a resistance for this candle right here, but it's a support for the rest of this. So I'll draw with my brush. This is a resistance for this, but it's a support for this. So sometimes old supports end up being resistances, and old resistances end up being supports. You can see that in several cases. Oops, I did not mean to draw that. You can see that in several cases where let me look for one, a clear one. Okay, yeah. So you see this support right here, this blue support. We had trouble breaking it. We bounced off of it, and then we got rejected, and then we bounced again. We went down. We tried to retest this level once right here and another time right here, and we couldn't break it. So this old support became resistance. So supports can be resistances, and resistances could be supports. If that makes sense. So I'm just gonna delete this and delete this. Now, after the 4-hour timeline, we're gonna go to the 1-hour timeline. So this is basically when I start doing. I always look at the 1 hour before the day starts. 1 hour is like my chart for swing trades and other trades. So we're gonna throw more resistances and supports on here. I know I didn't identify all of them. This is just a general. You can obviously do more, but very quickly we're just gonna do a very quick like charting. So we're gonna go and find more support and resistances right here. This was actually the candle. Remember the 3 wicks? 1, 2, 3. This is the candle that we used in the presentation. So we're gonna change this to a different color. We're gonna use let's use green. This is my 1 hour. See here the support right here. Oops, I did not mean to do that. I changed stocks. Where am I? I'm very zoomed in. So we can find more supports. Let's see. Resistance right here, support right here. More resistance right here. You see how we had trouble breaking out of this level, but then finally we broke out. This old resistance becomes a support for this level right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 tests of that level, and we couldn't break it until recently. We finally broke that level. You see how these old resistances and old supports are actually not just like Not just like, they're not just pseudoscience. They're actually there. Like you could see that there's several tests. 1 day, 2 days, 3 days, 4 days, 5 days of that testing that old support, and then we finally break that. That's how you know. That's how you know that these resistances and supports really work, because it's not just 1 day that they work. These are support and resistance levels that are gonna work for several periods, like a long period of time, maybe like a month or 2 months. That these resistance levels are gonna work. I remember when I was trading purely Nvidia. Here, actually, for all case and measures, I'll show you what my first early levels of trading looked like. It's gonna hurt your eyes. Look at my Nvidia chart. Look how many support and resistance levels I have. And all of these are different colors. Different colors for different timelines. Like my pink, my purple is my 1 day, my yellow is my 15 minutes, my pink is my 4 hour. They're all this is something that I've tested. This is something that I've traded with and something I made money with. So that's why I'm trying to put it out there. And if you guys have any questions whatsoever, I'm gonna answer them. Just tag me. And yeah, I'll just see the message. Okay, so we found the 4 hour, we found the 1 hour, we found the 1 day. Now let's go down to day trading levels. That was all swing trading levels. Let's go down to day trading levels. Day trading levels, we start with the minutes. We start with 15 minutes. 15 minutes, we're going to throw down a few more supports and a few more resistances. This is all of our day trading levels that you should be updating these day trading levels maybe once a week, but ideally every 2 days. They work. They're very like useful, but I don't want to hold these levels accountable for more than like a week. Yeah, I know. I use a black background. I can't imagine people that trade on a white background. So I'm gonna draw another line, and we're gonna use yellow for 15 minutes. I use yellow because 15-minute timelines are usually the most important when it comes down to day trading. So I throw a resistance up top, a support down low, another resistance up here. Look how many channels we just make. We made one channel, we break out of the channel, and we got puts all the way down. We break up the channel, we go longs, etc., etc. See another resistance right here. See, look, this 15-minute resistance, it plays out again right here. All these support and resistance levels all matter. They're none of these are just like random lines. People will tell you that support and resistance levels don't work, but they definitely do. Look at this. Look, perfect capture of that level. We broke out with high volume, and the rest of the day is green. It's perfect. These levels work so well. Yeah, definitely so. So the largest time frames, so a break of like a larger time frame, for example, a break of this red line or this purple line or whatever the color this is, would be more important than a break of the yellow line. However, a break of the yellow line, which is our 15-minute, a break of a 15-minute support and resistance is more important for me as a day trader than it is like that's when I do my entries. All my entries are based off breaks of 15 minutes. But if I see a break or a bounce off of a 1 day or a higher time frame, for example, that is a very key indication of where market is heading. For example, if we bounce off of this line, then I see, okay, look, we bounced off of this line, we're going to go back up. Or if we bounced off of it, we're going to go back down, for example. That's just a very quick example. You see how we bounced off of this line? Like, okay, that means market for the next few days is going to go back up. So we have 1 day of green, another day of green, a third day of green. If that makes sense, basically. For day trading levels, okay, let's just quickly, we threw down the 15-minute levels, but we trade on the 5-minute. This is important. We trade on the 5, but we threw down levels of the 15. So 5 minutes. How would we trade? So this is how we would trade. We would see, look, we broke down here. This was Tuesday. This was yesterday. Okay. So we started off the day at this level. We broke down. We broke this pink level right here. We tested it once, 2, 3, 4 times. Tested it again 5 times. Right here is when I think about puts. We break it, and I wait for a second candle to give me confirmation. And on this candle, I enter puts. This second candle right here. So then we see another wick, 2 wicks, we couldn't get above it. And then we get puts all the way down. You could sell right here, but then you could see another retest. You see we've retested the support right here. There's all resistance right here. We retested it, we got rejected, and then you could puts all the way down, the entirety of the way down. You could take profit at the 15-minute level right here, or you could wait and see for one more candle and see if it breaks. So we got a break of the 15-minute level. It was a good volume. Everything is important. Volume is very important when it comes to support and resistance trading. You want to make sure that all the candles aren't just small miniature candles. You want to see good volume, good rejections. Like this candle right here, this red candle is a very big rejection. It's a huge candle of red. Then you see a big break of the 15-minute level, and then you just ride puts into close. Very easy, very simple. Let's see what we would have done today. Today, today we're going to you're gonna see we're gonna play the high. This is an old 15-minute level, old 15-minute break, old 15-minute high, right? We got rejected off that high, and then we went down for the rest of the day. Very simple, very easy. Does anyone have questions so far? This isn't too difficult. I'm waiting for anyone to see if they have questions. Doesn't look like anyone has questions. So right now what we're going to do, we already did the charting. We're going to do one more thing. We're just going to go over a bad trade from today. So we're going to go over my QQQ trade today. So one thing led to another. I got busy with class. I wasn't really able to monitor this position, but ideally this is what happened. I had a level right here. We got rejected off of it 4 times. We got a clean rejection, clean break, right? We found the support right around here, and we tested another higher value, like higher time frame resistance, and we got rejected off of it. However, theta, because of how much chop, like red green we had, how much theta took away from my contracts quite a bit. The trade was there. The trade was definitely there, but because I chose 0 DTEs instead of like going a little bit higher time frame, my contracts lost a lot of value over just this green run up and this chop into close. However, the vision was definitely there. We got to 311.40, and I had 311 puts. We got this huge gap up overnight. We had this green gap up overnight off of Google earnings. If you look at Google earnings and Microsoft earnings, Google killed earnings, Microsoft destroyed earnings, right? All the AI based companies are doing very well in their earning calls and everything like that. All they have to say is AI, and the stock boosts by 5 points for no reason. But yeah, what happened with this QQQ call? We played it as best as we could, and because these type of days happen, and there are days where just like they look like trend days, but if you really look at the candles and on which you enter, even if you come down to the 15-minute candles, like this looks like a very tradable red day, but it was super hard to trade today. If you guys made money today, congrats to you. I finished green today, but it wasn't very green. I had the very nice Nvidia trade in the morning. Nvidia, look, these are key levels that I haven't updated in over a year. These are old key levels. Like we rejected it up top, we got support down low, we rejected it, caught our support, went down, went up, caught our resistance, went down. Very simple, and it always works. And these are old supports. Like these are like over a year ago. I have not traded this stock in so long. Like I stopped trading this stock after it became like meme. It got really manipulated in price action, and like Tesla. It became like the Tesla of semi stocks, and I just did not like that. It's very manipulated. I don't like that too much these days, but it is what it is. It's still my favorite stock to trade. It's still the stock that made me the most amount of money. Still what I started doing my call outs off of. Nvidia is still my favorite stock. End of the day. Do you guys have any questions? Or we could do another charting of like another ticker you guys have. Throw a ticker down there and we'll trade it. We'll like live support resistance it up right now. Any questions? Don't think it's too difficult. If someone's talking, let me know, because some people are just muted on my end. Okay, so okay, I see someone typing. It doesn't have to be related to supply and resistance or support and resistance. Okay, it's a good question. Why do I trade on the 5 and not the 3 or the 1? Okay, so the 3 minute, let's take a look at 3 minute candles. 3 minute candles, you're gonna get a bunch more, um, you get a bunch more candles, and to me, for my type of trading style, I don't like just I know a lot of my trades are scalp like, they're like very scalpy, but I trade off of the 15 and the 5 more so, because if you look at the trends in the day, you guys have to remember the best way to picture the market is there are trends within trends. Like there are trends, like we'll go up, but if you zoom out, we're still like, look, today was a red day. Yesterday was a red day, but look, we're still going up. You know what I mean? Like you have to think about the market as a trend within a trend. Yeah, you have to reduce the noise. There's too much noise when you go in the 1 minute. So if I go in the 1 minute, of course you can use scalping strategies on the 1 minute. Like you could see how many times we respected that support and how we broke through that resistance. Of course you could scalp off the 1 minute, and honestly, it's probably like easier to scalp off the 1 minute, but you will have more losing trades. You will have more winning trades, but you will also have more losing trades. You will get faked out. You will have a bunch of just stupid trades where you're just gonna be like, damn, why did I enter that trade to begin with? You're gonna have trades where you're just, oh look, we just randomly have a huge red candle out of nowhere, and the next candle is gonna be immediately green. You're gonna see a bunch of illiquid candles, and the next candle is just gonna be like full of like the complete opposite direction that you need it to be. You're gonna see random reversals on the 1 minute chart. So I don't like that. It's just too stressful. It's too much, too many ticks. I like to do one. If you look at the 1 day chart, like this is like the most ideal thing to look at before heading into any market day. Heading into any market day, you're just gonna be like, where are we on a macro based level? Where are we? And let's hide the indicators. Okay, where are we? We're like, okay, look, we formed a double top here and here. Okay, so we're a little bit overextended. We had 4 weeks of 5 weeks of green basically. Like, what do we need to do? We need to come back down a little bit. So my mind every day is just looking at like, oh, like, are we gonna really like, am I gonna buy puts in this type of macro environment, or am I gonna buy calls? And me personally, I'm the type to believe that like sometimes the market needs healthy red days. I know a lot of people are just like, oh, calls all day, every day, you'll end up making more money. But I'm the type of person to believe like red days are very healthy in the market. Red days keep the market going up. Red day keeps like money in the market. Red day keeps money out of the market, etc., etc. Like it's very healthy to have a few red days. That's why I look to play shorts a lot more, like in this type of environment where we're just gonna like we're forming double tops. We don't really know where the market's gonna go. It's like I'm not like too sure what the like what the federal yeah exactly. I'm not too sure what the Federal Reserve is gonna do with the market. That's why I'm just playing old levels. I see an old high, I'm gonna play a rejection off of that high, or I see an old low, I'm gonna play a bounce off of that low. There's no point in you to exploring uncharted territories. Just play levels that are already there for you. You see this top right here, just play that top, play that rejection off that top. You see this low right here? Play a bounce off that low. Simple stuff. And you can add more things to it. You can be like, okay, look, we had a low right here, and then you see how we're going up, a general uptrend. Okay, we're going up. Then when we hit this level down here, I'm gonna play a bounce. You know, it's not hard at all. This type of trading style is not difficult. People try to overcomplicate trading and just throw a bunch of indicators, a bunch of like stupid stuff that you just don't need. Trading at its core should be just bouncing off of levels and trading off of old levels. There's no point in you using a bunch of nonsense indicators that don't always work. However, I'm not saying the indicators don't work. They definitely do, but a lot of people they take away from people that actually study price action. If you want to get good at the market, you for a while just don't use indicators. Just look at price action. Just look how market moves according to old levels. That's all you gotta do. Okay, and the last thing that we're gonna do, we're just gonna go over a few indicators that might help beginners. These are just I'm not recommending these. I'm not recommending these, and I'm not saying that they're gonna make you money. I personally have like little to no experience using them, but I've seen people like them. I've seen people use them. I've seen people make money off them. I've seen people not make money off them. It's up to you whether or not you use them. The first one that we're gonna check out is it's called Fluid Trades. It's by this guy. It basically makes support and resistance levels for you. This is very lazy. If you do this, uh, you're basically a brand new trader and you can't make your own support resistance. And if that's the case, I understand, but you have to get away from this. So you want to turn your supply levels into red and your demand levels into green, and then your outlines just turn them black, and turn all this off. Just turn all these black. Okay, and then look, very easy support resistance, super simple. Uh, Next one that you want to turn on is called, another indicator you want to use is called the engulfing candles. Engulfing candle indicator is this one right here. Turn that on. I'll show you guys how to use these. I don't think you need to change anything from here. Yeah, you don't need to change anything from here. Basically what you're going to do is you're going to go on the 5-minute. I trade on the 5-minute. You guys can use any time frame you want. Actually, I was back testing this a little, and the best one to use for this particular indicator is the 1-minute time frame. But once again, I will tell you, I have no experience with this indicator. I just know people that use it, and I know people that like it. You're gonna wait for a rejection of this supply zone, and you're gonna wait for a red arrow on top, and then you buy puts. Super simple, super simple. And then you're gonna wait for I know this is the end of the day. This is all like post after hours. You're gonna wait for a bounce of a demand zone and get a green candle, and then you're gonna buy calls. It's super simple. I know it's very lazy. I would not recommend this type of trading style where you just rely on indicators for your entry. That I know, there are definitely indicators that do help you. However, this type of indicator, and also it resets indicators every few days. You only get like 1 day's worth of indicators. Like you can't go back and see what the old levels were. You just get new levels every day. And I'm pretty sure it repaints. I'm pretty sure. We could see it on BTC. We could see it on Bitcoin. Like on Bitcoin, you see that we tested this old demand. We got a green arrow, then we went up, so forth, and so on. We got another demand level, green arrow, we go up. Pretty simple stuff, not too difficult. However, you guys want to get better at trading. You guys actually want to get better at trading and not just want to make a shit ton of money. Please do it on your own. Do this on your own. Make your own supply and resistance levels. Make your own support and resistance levels. If any of you need help, please DM me. I will look at your charts and I'll say that I don't care if you think you're stupid. I don't care if you think that all this is very difficult. Please just DM me if you have any questions on whether your chart looks good, whether or not it's like even if it's a stock that I don't know. Like I will look at the chart and I will tell you, hey man, I'm not sure I see it the same way you do. Or I'll be like, oh, this is a really good chart. Do you mind if I use this trade? Or something like that. Like I'm always here to like as a resource. And the more that you ask me questions or people around here, you just ask each other questions, the more you will learn. There's no point in being embarrassed about questions. I know a lot of people in this market are very confused. There's a lot of new traders coming into the market. There will be a bunch of new traders coming into the market. Take your time. Don't rush things. If you have red trades, look, it happens to everyone. All you gotta do is take a step back, wonder where could have this trade gone wrong? How could I minimize my losses, or how could I have changed when I entered? Like that's all you gotta do. Don't be harsh on yourself. Ask questions and try to learn. That's the number one thing in this type of market. If you guys have any questions, feel free to unmute yourself. Well, if you guys don't have any questions, I don't know. You guys can have a good rest of the day. You guys can chill here for a second if you guys have any questions. I'm gonna wait for everyone to leave the call before I leave myself. So, if you guys have any questions, feel free to do so. No problem, bro. This is simple.